Just wanted to touch slightly on the federal carbon. As many of you may have realized, because you're probably seeing your April invoices from your local utilities, effective April the 1st, the federal carbon charge increased from 5.87 cents per meter cubed to 7.83 cents per meter cubed. Now, greenhouses are eligible to obtain an 80% exemption of this. You'll not notice on your bill that you've received the exemption, other than if you do the calculation, you will notice that you're not paying 7.83 cents. Other farm registered businesses are eligible to obtain exemptions on fuels used on the farm, such as gasoline and light fuel. To be a registered farm, you must have a farm registration number, which the OFA can assist with, as can Ag Energy. If you're looking to obtain a farm registration number and you do not have one currently, please reach out to us. We will send you in the right direction, give you the correct contacts to ensure you have that. It's going to be even more important as the federal carbon increases that you have that registration number. And there are some great associations advocating on behalf of farms to get exemptions. So the OFA has pushed through, and they're halfway through this bill becoming law, Bill C-206, which would allow all farms to have exemption of natural gas and propane. And it's specifically on grain drying, but it's actually now becoming a wider spectrum, that bill, to allow for potentially all farms to be eligible for exemptions on gas and propane. On May the 14th, the Grain Dryers of Ontario sent out a notice to their members. We also know that the OABA Group, Ontario Agribusiness Association, also sent out communication, and the OFA continues to speak to their members. So Ag Energy is not a lobbying group or association, but we definitely support all of the associations who are looking for this exemption. We provide information and energy expertise when it's requested, and we are trying to keep our members aware of all of the wonderful efforts their associations are doing to try to provide and obtain for them the federal carbon exemptions. If you have questions about the federal carbon, its exemptions, and or what's happening with Bill C-206, please let us know. Otherwise, your association would be your best form of knowledge.
Michelle, we do have a quick question about the 80% exemption for greenhouses. Could you clarify which fuel the 80% exemption applies to?
Yes, the 80% exemption is specifically on natural gas consumption. And so when this regulation was offered, Ag Energy provided our greenhouse members with forms which were completed. We submitted those forms on their behalf to their local utility, whether that be Enbridge at the time or Union Gas, EPCOR, the City of Kitchener, or City of Kingston, to ensure that those members receive that exemption.
Great, thank you. I don't see any follow-up questions.
Thank you very much, Megan. And if you do have questions after the presentation, something comes to you, please feel free to give us a call or send an email as well. So now we're just going to move over to natural gas, and I'm going to ask Greg Villamere to provide us with a natural gas update.
Hello, everyone. Just wanted to touch on the Line 5 situation going on in Michigan right now. AEC has had quite a few questions regarding the impacts of this and what it actually might mean moving forward. So the first things first is that this is a crude oil as well as a natural gas liquids pipeline. So it should not affect any natural gas pricing moving forward, based on what's going on right now. As some of you are aware, the state of Michigan filed legal action to shut down Line 5. Enbridge has filed a lawsuit to challenge the order. They actually have a really good case, but we will leave it up to the courts to decide. However, if a closure does happen, you'll likely see some increased pricing for things like propane and diesel and gasoline at the pump. Just to touch on Dawn storage, if we look at this current chart, it's a little choppy, but it is pretty smooth for the most part. You can see the peaks and valleys based on winter versus summer, so in injection and withdrawal seasons. Right now, if you look at the red line, we are right over there closing in on the end of May. We're slightly above the black line, which is the 5-year average. What that means is pricing shouldn't be going down anytime soon or up anytime soon. Really, right now, prices have stabilized within, a 10 to 20 cent range. However, moving forward with a hotter summer coming up, which is expected, we do feel that the gas-fired generation will eat into some of that Dawn storage. Moving on to pricing, right now, for those of you that don't purchase in GJs, so our ABC members, on the right-hand side of this chart, you'll see prices in cubic meters. For those that are on bundled transportation contracts, you'll see the GJ pricing on the left-hand side. So we've basically taken a look at the last 3 years here, and you can see, again, where the cold winters have happened back in 2018 to 2019. And then going into summer of 2019, and of course throughout the pandemic months for the most part in 2020, where overall usage in the marketplace was much lower. So there was quite a bit of gas available, therefore pricing did drop off. Now you can see back in October 2020 timeframe where prices started to spike up again. And into Feb, we stabilized a little bit and then back up into February of 2021 when we saw some cold weather. Prices did spike again. And it's our view that prices are going to continue on an upward trend. Not a significant, i.e., we're not going to see $6 gas anytime soon, but however, we could see $3.50, $3.60 gas. Looking at EIA storage, similar to the Dawn storage, if you look at the red line and the black lines, those are your current gas year as well as the 5-year average. You'll see that EIA, which is based heavily on the US marketplace, you'll see that it is actually trending slightly lower currently than the 5-year average, which is actually what's going to drive pricing further up. Hopefully with the dollar exchange right now, as we see it's fairly strong and continuing that trend, then that'll benefit us on the Canadian side. Looking at a summary of just the gas forecast moving forward, markets right now are pretty attractive. We've seen quite a few members actually come in and purchase some further out terms, and just for the purpose of risk mitigation, keeping prices stabilized. If you're looking at purchasing anything for the next few years, definitely give Michelle, myself, or even Thomas a call on the ABC side. Looking at long-term pricing, if you recall, back in 2019, we offered a further out long-term purchasing option that took us out to the end of October 2027. We are now actually furthering a new long-term pricing strategy to take you out to October of 2030. For those of you that participated last time, you would have seen those emails actually from Thomas the other day. If you have any questions, definitely get back to us, let us know. For those that did not take us up on the option back in 2019, we will be offering another long-term pricing strategy that's going to take you from 2025 out to 2030. So look for that soon. It's definitely AEC's position to actually take out a piece of that moving forward. Prices are very attractive right now. So look for that offer, and we're here to help.
So Michelle, you seem to be on mute right now.
Oh. So thank you very much, Greg, for that. And just to let everyone know that the long-term deal, to our knowledge, Ag Energy Co-operative is the first OTC, which is over-the-counter retailer, to actually offer that out in the industry. So we're very pleased as staff to have been able to do that for you, your co-op. If you do have any questions, as we mentioned earlier, and as one of our participants has already done, please use the chat box and or raise your hand. And Megan is on call to answer those. Megan, do we have any questions at this time on the natural gas presentation?
We do not have any questions on the natural gas presentation. We had a follow-up comment after you addressed the federal carbon charge question. And it was just to let everyone know that the 80% exemption for the natural gas for greenhouses does not apply to natural gas consumption for cogen operation. And then I still haven't seen any questions come in on the natural gas side.
Yes, thank you. And you're right, it does not apply to cogen. It technically should also not apply to if you have a bunkhouse. And so it is very specific to the greenhouse baseload operation. And so thank you for pointing that out and for clarifying that. So if there aren't any questions at this time on the gas side of the presentation, we will now move to electricity and ask Thomas Bellissimo, our inside sales representative, to give us an update on electricity. Thomas?
Hey folks, it's Thomas here. I'm super excited to talk about electricity. So let's get into it here. Do I have control here where I can switch the, there we go. Perfect. Excellent. Here we go. Okay. So if you've heard me speak about electricity before, or if you've really, talked to anyone here in the office, electricity essentially is made up of two items. You have your hourly Ontario energy price, which is short form to HOAP, and you have global adjustment, short form to GA. From this graph, we've taken a snapshot of the last year of what these two items have looked like, starting from May 2020 up till April 2021. You'll see that the global adjustment portion in the yellow bars there, essentially they are the larger portion of electricity prices versus your HOAP, which is that wavy green line. Now, if we look at, say, a average of global adjustment over this year snapshot here, that's that blue line up top. That is currently at 10.32 cents per kilowatt hour for that time period. And then similarly for the average HOAP price, that red line that sort of intersects the HOAP pricing there over the year, that average is about 1.56 cents per kilowatt hour. Now I will refer back to that graph later on in a couple slides, but keep that in mind, and we'll sort of kind of dig down deeper into HOAP a bit more now. So what you're seeing on your screen now is we have a from 2014 to present where HOAP has been basically, right? So you can really see from looking at this graph how HOAP kind of travels in this, it jumps up to a peak and then it falls into one of its valleys, and it's very up and down across that period of time, right? So when we take an average and we look at that over this period, 2014 to present, HOAP pricing averages out at about 2.06 cents per kilowatt hour. Now, looking forward, so we've seen, we've talked about the average of the HOAP at that 2.06 cents. The outlook of where electricity is going, over the next 5, 10, 15, all the way up to 2040 there, according to this graph, we can see, like, these graphs are taken straight from the IESO, which is the Independent Electricity System Operator. This is their annual planning outlook. So what we're looking at here is demand growth. So coming out of COVID, they're looking at demand for electricity, and they're in each of their scenarios here, each of those lines there, the blue, yellow, light blue, and the green, are all different scenarios they've put together for the increase in demand. So across the board, they're saying demand is going to rise for electricity, right? And we see even in their slow recovery scenario in their winter, which is that green line, still it's increasing fairly rapidly over this time period here, out to 2040. Now, this growth is really it is caused by a couple things. So we have growth in the agricultural sector, which many of you are seeing right now. We also have increase in residential consumption. Now with COVID, we've seen a lot of offices move to more of an online presence. Working from home has become more popular. And it looks like some of those offices now, these online offices, may stay that way, post COVID, once we're through this sort of pandemic time frame here. In which case, that is driving some of that increased residential demand. The other big factor for this demand increase is in industrial sector growth. So that is growing as well. Paired with the agricultural, and these three things are really pushing up our demand over this period of time. Now, on the supply portion of things, we see something fairly interesting here. Right now, with the nuclear power, over the next the same period of time here that we looked at in the last graph, we can see that there's a number of plants that are either being retired or being refurbished over this period of time. So in both cases, the output of electricity for the supply that they're providing is being scaled back as they're doing these refurbishments, as they're coming offline. So we're seeing a decrease in the supply as well. So if we move to the next slide here, we'll do a bit of a recap of that. We've seen demand increasing because of the agricultural sector, industrial sector growth, and increase in residential consumption. We pair that with the supply decrease with the nuclear power plants here, and so both these things paired together suggest that the price of electricity, the HOAP portion of that price, we should be seeing increasing over that time period. And that's strictly just a higher demand, lower supply, prices go up. Right? Now, what does that mean for us? Essentially, it's a fun thing for us, right? We get to look at that. We've seen this graph before. We got to show you I showed you the where HOEP has been since 2014 till present. And so this is that graph again. Now, if prices for HOEP can go up as we suggest that they look like they're going to do with these changes in the electricity market, we get to look at some more interesting stuff here. So historically, when we've talked about electricity, AEC has always been on the side of let's give you a market rate plan. And essentially what that was is you are paying for the commodity portion of electricity wherever the market is settling, right? Plus the ag fee that is in there, right? So when we look at that, and we look at where if we consider the first graph I showed with the global adjustment and the HOAP portion, it made sense then, right? You had this small portion that is HOAP, and it jumps up and down, but it's a fairly low portion compared to that global adjustment portion. And global adjustment you cannot fix. You can only fix the smaller HOAP portion, right? So it made sense to just follow along with the market. Now, if we're seeing an increase in HOAP pricing, that means electricity is getting more expensive. The commodity portion is getting more expensive. Now is becoming a time where we're sort of looking at things and going, well, now is there value to add to the membership in fixing a price? So what I've done on this graph now is I've put that sort of yellow bar area there. And we believe if we can fix a price somewhere in that spot, in that yellow bar, as prices start to go up for HOEP, we can add some value there by saying, hey, if you lock in a price here, you are safe for future years as the price of HOAP goes up. Now, again, it's something we are looking at because we're always looking at things where we can add value to the membership. So it's something we're currently looking at, and according to where these changes are pointing us towards, it's an option that is being explored. Now, just to do a quick sort of recap of what I touched on here for electricity, biggest things are electricity is made up of hourly Ontario energy price, HOAP, and global adjustment, GA. Changes in the market are coming. Increased demand, decreasing in supplies. We're seeing that now. Market rate, still viable option. We're still recommending that. If you're not already on a plan with that, let us know. We can take a look and see if that works for you as well. But also, keep an eye out. You may see soon that we're starting to offer those fixed price contracts for electricity, and there may be a point where those actually start to look fairly attractive for the membership.
Thank you very much, Thomas, for that. And again, we will open up for questions. Just a reminder that there's always your chat box, which is the yellow box and arrow. You can type in your question, or you can also raise your hand, and Megan or Laura will unmute your mic and allow you to ask your question directly. Again, if you don't think of a question now and want to ask something later, please feel free to call the office and or send us an email. We would be glad to assist in any way that we can. Megan, are there any questions at this time on the electricity portion of the presentation?
I do not see any raised hands or questions right now.
Well, thank you very much for that, Megan. So barring no questions, we're going to move on to a little bit of fun, and we will ask Laura to announce the raffle prize winners for today's event.
Hi, so our raffle prize winners for today are Christopher Espinola, Brian Van Geest, and Brad Chandler. So congratulations to you guys. Your prizes will be mailed to you, okay? Right.
Thank you very much for that, Laura. And I want to thank all of the participants today for joining us. We do look for any feedback if you felt there was value in this presentation and the content. If there are other subjects that you'd like us to present and provide you with additional information, please let us know. We are here to serve. It is your cooperative, and we're hoping to add value every chance we get. Thank you to Greg and Thomas for their participation today, and we hope everyone has a gorgeous day. It looks absolutely beautiful out there, and we thank you for taking time with us today at lunch. Have a nice day.